On June 9, 2024, something happened that should have sent shockwaves through every American household, but most people didn't even notice. The mainstream media barely covered it, politicians stayed silent, and yet this single event could fundamentally alter the economic foundation that has powered American dominance for the past 50 years. For decades, the United States has enjoyed an extraordinary privilege. We print dollars, and the world accepts them. We run massive deficits, and other nations finance them. We consume more than we produce, and foreign countries send us their goods in exchange for pieces of green paper. This system, built on the petrodollar arrangement, has allowed America to live beyond its means while maintaining global supremacy. But that system is fracturing. And what's happening right now in real time could end American economic hegemony as we know it. This isn't speculation. This isn't fear-mongering. This is documented reality unfolding before our eyes. And by the end of this video, you'll understand exactly why the next few years will determine whether America remains a superpower or becomes just another indebted nation struggling to pay its bills. Let me show you what's really happening and why it matters more than anything you'll hear on the evening news. The story begins in 1974, when the United States was reeling from multiple crises. The Vietnam War had drained the Treasury, the Watergate scandal had shattered confidence in government, oil prices had quadrupled during the Arab oil embargo, sending the American economy into recession. And perhaps most importantly, President Nixon had already severed the dollar's link to gold 3 years earlier, leaving the currency backed by nothing but trust and economic power. Into this chaos stepped Henry Kissinger with a brilliant and ruthless solution. If America couldn't back its currency with gold, it would back it with something even more essential: oil, the world's most traded commodity, the lifeblood of industrial civilization. The arrangement that emerged was elegant in its simplicity. Saudi Arabia, the world's largest oil exporter, would price and sell its oil exclusively in US dollars. In exchange, America would provide military protection, advanced weapons, and security guarantees for the Saudi royal family. Other oil-producing nations would follow Saudi Arabia's lead, creating a system where every country that wanted to buy oil had to first obtain US dollars. This petrodollar system transformed the American economy overnight. Suddenly, every nation on Earth needed dollars, not just for trade with America, but for the most fundamental commodity driving their entire economy. The dollar became indispensable not because of America's economic strength alone, but because it was the only way to access the energy that powered modern civilization. The benefits for the United States were staggering. We could print dollars and export them to buy real goods and services from other countries. Foreign nations would take those dollars and invest them back into US Treasury bonds, financing our government spending. We ran trade deficits year after year, importing more than we exported, and other countries accepted it because they needed our currency to buy oil. This system allowed America to consume far more than we produced, while maintaining the world's strongest military and most advanced economy. We became the world's borrower of last resort, with other nations competing to lend us money at low interest rates. The petrodollar system was the foundation of American global dominance, but foundations can crack. And what happened on June 9, 2024 was the first major fracture in a system that has held for 50 years. Despite widespread reports claiming that a formal petrodollar agreement expired on that date, the reality is more complex and potentially more dangerous. There was never a formal written treaty requiring Saudi Arabia to sell oil exclusively in dollars. Instead, the arrangement was based on informal understandings, economic incentives, and geopolitical pressures that made dollar pricing the obvious choice for oil producers. What changed in June 2024 wasn't the expiration of a contract. What changed was Saudi Arabia's willingness to continue playing by the old rules. For the first time since 1974, Saudi Arabia began seriously exploring alternatives to dollar pricing for oil sales. The kingdom started discussions with China about accepting yuan for oil purchases. They opened negotiations with Russia about accepting rubles. They explored gold-backed payment systems with other oil producers. The exclusive relationship between Saudi oil and the US dollar, maintained for half a century through informal agreements and mutual benefit, was suddenly on the table. This shift didn't happen in isolation. It's part of a broader global movement that threatens to unravel the entire system that has supported American economic dominance. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been quietly building alternative financial infrastructure for years. What started as an economic cooperation group has evolved into something far more significant, a coordinated challenge to American financial hegemony. Russia, cut off from the SWIFT banking system and facing Western sanctions, began accepting yuan and rubles for oil sales. China, the world's largest oil importer, started paying for crude oil in its own currency rather than dollars. India negotiated rupee-based payments for Russian energy. These weren't isolated transactions. They were building blocks in a new financial architecture designed to bypass American control. The numbers tell the story. In 2000, nearly 100% of global oil trading was conducted in US dollars. By 2023, that figure had dropped to 80%. 1/5 of oil trades were now being conducted in alternative currencies: Chinese yuan, Russian rubles, Indian rupees, even gold. The monopoly that had lasted for decades was breaking apart. But the threat goes deeper than oil trading. The BRICS nations are developing their own payment systems, their own trade mechanisms, their own financial infrastructure. The M-Bridge project, connecting central banks from China, Hong Kong, UAE, Thailand, and Saudi Arabia, allows for immediate settlement in digital currencies without using the SWIFT system or US dollars. Transactions on this platform avoid American oversight entirely. China has been particularly aggressive in promoting alternatives. Over half of Chinese international payments are now settled in yuan rather than dollars. Chinese banks are accumulating gold reserves at record rates, adding hundreds of tons annually. The People's Bank of China has built a parallel financial system that allows countries to trade with China without touching the dollar-based system at all. Meanwhile, the United States faces mounting pressures that could accelerate this transition away from dollar dominance. The federal debt has exploded from $5.8 trillion in 2001 to over $36 trillion today. That's an increase from 55% of GDP to 122% of GDP in just over 2 decades. The government now spends more on interest payments than on national defense. $880 billion annually just to service existing debt, compared to $850 billion on the entire military budget. The fiscal situation is deteriorating rapidly. The 2024 budget deficit reached $1.8 trillion, representing 6.4% of GDP during a period of economic growth with no recession. These are wartime deficit levels during peacetime conditions. The structural disconnect between spending and revenue has reached unsustainable proportions. What makes this particularly dangerous is the timing. Just as America's fiscal position weakens, alternatives to the dollar system are becoming viable for the first time in decades. Countries that might have accepted American financial dominance when there were no alternatives are now looking at real options. The warning signs are already visible in currency markets. The dollar index has experienced unusual weakness even as US interest rates rise. Historically, higher American interest rates strengthen the dollar as foreign investors seek higher yields on US assets. The fact that the dollar is weakening despite higher rates suggests something fundamental has changed in global perceptions of American financial stability. This pattern resembles the early stages of the debt crisis that hit the United Kingdom in 2022, when bond markets lost confidence in the government's fiscal management. The pound collapsed, forcing emergency intervention from the Bank of England. Similar risk premiums may be building for the US dollar as investors begin pricing in concerns about American debt sustainability. The implications extend far beyond financial markets. The petrodollar system has been the foundation of American geopolitical power for half a century. It allowed us to finance military operations around the world, maintain bases in 80 countries, and project power globally while other nations paid the bills through their need for dollars. If that system breaks down, if countries can buy oil and conduct international trade without dollars, America loses the ability to export its inflation and debt to the rest of the world. We would have to live within our means for the first time in decades. The adjustment would be painful, potentially catastrophic, but the transition is already underway, and it's accelerating faster than most people realize. China's strategy reveals the calculated patience of a civilization that thinks in decades rather than election cycles. While American politicians debate quarterly GDP numbers, Chinese leadership has been methodically constructing the infrastructure for a post-dollar world. The scale of this preparation is staggering and largely invisible to Western observers. The gold accumulation alone tells a remarkable story. China's official reserves have grown to over 2,200 tons, but analysts estimate the real figure could be double that amount. Unlike Western central banks that view gold as a legacy asset, China treats it as ammunition for financial warfare. Every ton acquired is another step toward currency independence, another hedge against dollar devaluation, another tool for eventual yuan internationalization, but gold is just one component of a much larger strategy. The Belt and Road Initiative, often dismissed in Western media as infrastructure investment, is actually financial colonization disguised as development aid. China lends dollars to build projects, then accepts yuan repayments. The debtor nations gradually accumulate yuan reserves, creating natural demand for Chinese currency. Pakistan, Sri Lanka, Kazakhstan, dozens of countries now hold substantial yuan positions not by choice, but by necessity. The mBridge payment system represents the technological backbone of this new order. Unlike SWIFT, which routes transactions through New York and subjects them to American oversight, mBridge operates entirely outside Western control. Payments clear instantly between member central banks using digital currencies. No intermediaries, no American monitoring, no dollar conversion required. Saudi Arabia's quiet integration into this system marks a tipping point that most analysts are missing. The kingdom didn't just explore alternatives to dollar oil pricing. They joined mBridge as a full participant. Saudi oil payments can now clear directly into yuan, rubles, or digital reals without ever touching the American financial system. This isn't theoretical, it's operational right now. The implications become clear when you examine trade flows. China imports over 10 million barrels of oil daily, much of it from Saudi Arabia and other Gulf states. If even half of these transactions migrate to yuan settlement, that's roughly $150 billion annually removed from the petrodollar system. Multiply that across all BRICS energy trade, and you're looking at $500 billion to $700 billion in reduced dollar demand each year. India adds another layer of complexity to this equation. As the world's third largest oil importer, India has negotiated rupee-based payment agreements with Russia, Iran, and Venezuela. But rupees aren't internationally convertible, creating massive imbalances. Russian banks are reportedly sitting on billions of rupees they can't easily convert or spend. The solution involves triangular trade arrangements where India pays Russia in rupees, Russia buys Chinese goods with yuan, and China settles with Saudi Arabia in digital currency. These circular trading relationships are creating parallel economies that function independently of dollar-based systems. Every transaction that clears outside the American financial network reduces global dollar demand, weakens the petrodollar system, and diminishes American leverage over international trade. Meanwhile, Europe finds itself caught in an impossible position. European Union leaders publicly support the dollar-based system while privately preparing for its decline. The European Central Bank has dramatically increased gold purchases and begun developing digital euro capabilities. France has signed yuan-based trade agreements with China. Germany negotiates energy payments in euros rather than dollars where possible. The European calculation is brutally pragmatic. They recognize that American fiscal irresponsibility threatens the entire dollar-based system, but they also understand that premature abandonment of the dollar could trigger immediate economic chaos. So they hedge. They diversify. They prepare for multiple scenarios while hoping the transition happens gradually enough to manage the disruption. This global repositioning is accelerating America's fiscal crisis through a mechanism that few policymakers understand. As foreign demand for dollars decreases, those dollars return to the American economy through what economists call the currency boomerang effect. Dollars that once circulated internationally, suppressing domestic inflation, flood back into American markets, driving up prices and forcing the Federal Reserve into impossible choices. Higher interest rates to combat inflation make the debt crisis worse by increasing borrowing costs. Lower interest rates to support economic growth make inflation worse by weakening the dollar further. The Federal Reserve is trapped between two unacceptable outcomes, and the trap is closing as international dollar demand continues falling. The Treasury Department faces similar constraints. To finance government operations, they must sell bonds to investors willing to accept dollars as payment. But as global dollar demand weakens, Treasury auctions require higher interest rates to attract buyers. Each percentage point increase in borrowing costs adds hundreds of billions to annual interest payments, accelerating the debt spiral. Foreign central banks, once reliable purchasers of American government debt, are diversifying their reserves away from Treasury securities. They're buying gold, accumulating yuan, purchasing European bonds, investing in commodities, anything except additional exposure to American fiscal mismanagement. The captive audience that financed decades of American deficits is quietly walking away. The petrodollar system that built American dominance is dying, not through dramatic collapse, but through quiet abandonment by nations that no longer need to play by our rules. What took 50 years to build is unraveling in real time, and most Americans have no idea what's coming next. The transition to a multipolar financial world is inevitable. The only question is whether America adapts to this new reality or clings to a system that no longer serves us. The next decade will determine which path we choose.